Okay, we're going to work now on posting some accounts to T accounts. To do that, you need to print out two documents. First, one in Blackboard called Posting Exercise, the other called Chapter 2 Posting Sheet. So you need to pause this, and if you have not done so yet, and print both of those out. Okay, on the screen I have each of the posting exercise here and the posting sheet to the right. So let's go through these transactions one at a time and see if we can post them to the ledger. So January 2nd, an amount of $12,000 was paid for rent. So cash is going to go down, rent's going to go up. How do I reduce cash? Credit it for $12,000. And rent, you're going to increase it with a debit, $12,000. So there's our first one. Now, I'm going to pause after we look at each of these to give you a chance to fill them in before I show you the answer, now that we're getting ready to move on. So let's look at January 3rd. Paid $60,000 cash on the purchase of equipment costing $80,000. The remaining amount was recognized as a one-year note payable with an interest rate of 9%. Okay, so we're going to $60,000 in cash is going to go out, so we're going to reduce cash for $60,000. We're going to get equipment worth $80,000, and we're going to have a note for the difference between the $60,000 and the $80,000. So take a minute and fill that in. Okay, let's see how you did. I got equipment worth $80,000. We'll just do it here. Okay. What else happened? I paid $60,000 cash, so cash is going to go down by $60,000. Let me put this over to the left here. Okay. So cash is going to go down by $60,000. Now we need $20,000. Every entry must balance. So I got a debit of 60, a debit of 80, a credit of 60. I need a credit of 20, and remember we have a note payable. Note payable is a liability, so it will have a natural credit balance of $20,000. Hey, let's look at the next one. January 4th. Purchased office supplies costing $17,600 on account. Purchased office supplies were for $17,600. So cash is going to go down. Office supplies are going to go up. So take a minute and record that one on the T accounts. Ready? We got office supplies, $17,600 worth. Oops. And it's on account. On account means I'm going to pay for it later, which moves me over to my accounts payable account. So $17,600 credit to accounts payable. It's January 13th. Provided services to its customers and received $28,500 in cash. So did we do the work? Yes. Services, so that sounds like revenue. And we got cash. So it sounds to me like revenue is going to increase and cash is going to increase. So go ahead and increase both of them. Okay, I'm going to increase cash by, how much was it again? $28,500. Now I'm putting these sequentially just for illustrative purposes. And what else happened? It was off supplies. Boy, that's a lot of supplies. No. Services rendered, 28,500. Service revenue. Revenue is always a credit, right? 28,500. I said always, normally a credit. January 13th, paid the accounts payable on the office supplies purchased on January 4th. So here's our office supplies payable, 17,600. We're going to pay it off. So I'm going to take cash, reduce cash, and reduce accounts payable. Go ahead and do that. Alrighty. 17,600 come out of cash. Reduce cash and reduce accounts payable. January 14th. Paid wages to employees for the first 2 weeks of January, $19,100. Okay. So what do we do here? We got wages and we got cash, don't we? People like to get paid in cash. So I'm going to have wages for $19,100 and I'm going to pay it in cash. Give that a try. So wage expense, 19,100. Expenses are natural debits. And we're going to reduce cash when we pay these people. Let's go up to our cash account. 19,100 reduction. So debit wages, credit cash. January 18th, let's do the next one. Provided $54,100 worth of services to customers. They paid $32,900 and promised to pay the remaining amount later. Okay, so we have $54,100 worth of services. We're going to increase cash by $32,900, and when they promise to pay later, what do we call that? Accounts receivable. So we've got services, cash, and accounts receivable here. Make the entry, please. All right, let's go. So service revenue is going to be $54,100. It's a natural credit. We got cash of $32,900. We're going to increase that. And the difference, let me grab my calculator here, of 54,100 minus 32,900 is 21,200 of accounts receivable. Moving on. January 23rd, received $15,000 from $300 from customers for those services we just provided. So they're going to pay us part of our bill. So we're going to, isn't cash going to go up since we received it? And what's going to go down? Accounts receivable. So why don't you do that? Increase cash by $15,300 and decrease accounts receivable by the same amount. Okay, here I'm going to get cash, 15,300. And oops, did it the wrong way. Put it in the wrong place, didn't I? I'm going to get cash for 15,300. And I'm going to decrease my accounts receivable by the same amount. So increase cash, decrease accounts receivable. Debit cash, credit accounts receivable. January 25th, I received $4,000 as an advance payment from customers. We like that, getting $4,000. Advance payment means we haven't done the work yet, right? Haven't done the work yet. So it's okay, but we're going to increase cash, and when we haven't done the work yet, but we get money, what do we call it? Do we remember? We call it unearned revenue. So record that entry. $4,000 cash received. Unearned revenue, $4,000. So, got $4,000, put it in unearned revenue. What are we going to do when we do that work? When we do the work, we're going to take it out of unearned revenue and move it over to service revenue. Okay, January 26, purchased office supplies costing $5,200 on account. Try the entry. Okay, here we go. $5,200 in office supplies. On account means pay for it later. Accounts payable. So debit office supplies, credit accounts payable. We're going to pay for it later. January 28th, paid wages to its employees for the 3rd and 4th week of January. Another $19,100. So do it just like we did on January 14th, please. Here we go. Wage expense, another $19,100. And more cash going out, $19,100. January 31st, John withdrew $5,000. Guess he's going on vacation, huh? That's right, there's no place to go right now. There's a pandemic. Well, he's going to go on vacation anyhow. Take $5,000 out of the business for John, please. Reduce cash, $5,000. And I'm looking around for an account that might let me do that. I don't see it. I could take it from his equity, but remember we have a special account. It's called owner withdrawals. Owner withdrawals. We credited cash, so I'm going to debit that for $5,000. It's opposite his equity. Equity is a normal credit. It's going to be a debit because it's reducing his equity. January 31st, received an electric bill for $24.70. Have I paid it? No. But I'm going to record the expense, $2,470, because I know I have a bill. Am I going to pay it now? No, I'm probably going to pay it later. I just received it. $2,470. See how that works a little differently? That's called accruing our bills. We're not cash basis taxpayers, as it's called. We are GAAP GAAP business. Now do the same thing on January 31st, please, for your telephone bill, which you received for $1,494. Hey, I'm debiting telephone expense for $14.94, and I'm putting that exact same amount in the accounts payable bucket. And then the last transaction of the month, miscellaneous expenses paid totaled $34.70. So please record our miscellaneous expenses of $34.70 that we paid. So our expenses are going to increase, our cash is going to decrease. We paid them. So I'm debiting miscellaneous expense for $34.70, and I'm going to credit cash for $3,470. Okay, so there's some examples of posting transactions that you might encounter. Now, if you did not think you did as well as you'd like for this, I recommend that you print yourself out a blank posting sheet and worksheet and try it again. See if you get it right. Let's talk a little bit about balances in accounts. How do I calculate the balance in the cash account? Well, I would total up my debits, I would total up my credits, and subtract. We'll do an easier one later. But right now, if you didn't get all these right, or if you don't have a lot of confidence, please print them out, try it again.